Taking good trades is like 98.2765321% easier than you think it is. I don't care if you're a college dropout or if you have a bad job, whatever, anybody can learn to trade options. Whether it's $500, $1,000, 4, 5, 10, 30, 50, 100K, anybody can do it. In this video, I'm gonna show you exactly how I went from making $10 an hour or $8.25 at Jack in the Box to making over $600,000 this year alone. Little disclaimer, whenever I started at 14 years old, it took me almost 8 years to get to the point that I'm at. The reason I say that is because it's not gonna take you 8 years. It took me 8 years because I was stubborn, but I can teach you what I know now and what I've learned over the last 8 years, and you can implement that immediately. And if you stick to the end of the video, I'll show you the one thing that truly helps me with my strategy. The number one question that I receive is, do I have to know anything about stocks? Do I have to know about this, that, or that? And the answer is no. Listen, whenever I started trading, I didn't know anything. I didn't know what stocks were. I didn't know what crypto was. I didn't know what the charts were, candlesticks, anything. But lucky for you, I'm gonna teach you everything I know from A to Z. And I'm gonna show you exactly how to trade. Okay, now I'm gonna show you guys the main strategy that I use every single day. Today is December 9th. This is a trade that I took today, alerted to everyone in the premium. And basically I'm gonna go over a couple trades that show my strategy, right? So what I do is I wait for levels to be broken on higher time frames, wait for a fair value gap, retracement, and then I target previous highs or lows, okay? Or even gaps. So yesterday, or Friday, I should say, we had a 4-hour inside bar, pretty much across the board. So Nvidia, Apple, Tesla, Google, a bunch of stocks had inside bars, right? And so what I'm waiting is for a level to break above or below that inside bar. And why is because whenever you have a large move and then you have the next move, the next 4 hours of the day inside, what that usually means is that price makes a move towards the upside and then it just consolidates sideways. So that's basically what happened, right? So now that we understand that, we can go into minuscule time frames and trade those levels, right? So obviously we never got a setup here early in the morning. We're kind of just consolidating between these levels until I saw that we broke low of day. We created a fair value gap as we're breaking low of day. And then we just wait for price to retrace. And then my target was the gap below down here, right? Boom, because we gapped up and gaps get filled. All right. So as soon as I saw this fair value gap, the level be broken, I entered on this candle here, right? On this candle, I entered and I was pretty much almost out at low a day. I was playing 0 DTEs and these contracts move very, very fast. I wasn't in super heavy and it allowed me to make, I think, 35%. Just off that little move. If I would have held all day, yes, I would have made a lot more, but I never care about how much I could have made. Shoulda, coulda, woulda. I just take what I can get, I scale out, and then once I want to get out the full position, I go play golf. All right. But this is my setup right here. 1, I'm waiting for a level to be broken. 2, I'm waiting for the fair value gap to form through that level. 3, retracement. 4, have a target, so your entry and exit, right? That's the strategy right there. Boom. That's example number 1. Now here is another example on Apple. So this morning, again, here it is again, Apple breaking previous highs and then forming a 4-hour inside bar. Price made a large move and it's consolidating there. So I'd want to, have the same thing, same setup, right? But before that, for today, in this trade, I actually missed. A lot of people caught, but I just wasn't paying attention to it. On the 5-minute, we had the 4-hour inside marked from the previous Friday, right? So you have a 4-hour inside bar there. I was hoping that we would come down to the 4-hour fair value gap that broke previous highs because it's a very strong level there, right? Obviously, a lot of buyers as we saw today. I was waiting for levels to be broken. We didn't break out to the downside. We actually gapped down and we ended up just climbing back up. And then we ended up breaking above the 4-hour inside bar with a 5-minute fair value gap here, right? I didn't cash this trade. And I honestly would have, if I did, I honestly would have got out at previous highs. But knowing Apple, I probably would have left some runners for short. So this strategy works very, very, very well. And it happens almost every single day. It's a very, very, very good strategy. All you have to do is wait for the levels to be broken, fair value gap retracement, and then get it. And then target previous highs or lows if you're trading the downside, right? And the only way you can lose is when the trend no longer is going your way. So the market either goes sideways, you take a small loss, you see the risk to rewards on these, or the market reverses on you and then you just start trading the downside, right? It's as simple as that. Okay, now I'm gonna teach you guys the most important part of this strategy, and that's this right here, a fair value gap. What is a fair value gap? Well, it's a simple displacement in between three candles. So it's based off three candles here. See the 1, 2, 3 candles, 1, 2, 3. The first and third candle aren't touching. Neither are the wicks. They cannot be touching. If the wicks are touching, then no, it's not a fair value gap. It's not just the body, it's the candles themselves. The reason this happens is because whenever there is an influx of buyers or sellers, that means that, buyers are outweighing the sellers. When you look at candlesticks, you can see that a lot of them are, going up and down. And that's because candlesticks are just a visual representation of buyers buying and sellers selling, right? It's just going up and down, orders getting filled, right? Well, when there's an influx and a large displacement of buyers, that means that there's a ton of orders in these areas that still need to be filled. Same thing to the downside. That means there's a bunch of sell orders here outweighing buyers that still need to be filled. So whenever you break strong levels on larger time frames, say for example like the 4-hour inside bars, right? You're breaking these stronger levels on larger time frames. If you remember anything, or if you've seen any of my previous videos, you would know that the larger the time frame, the stronger the level is going to be, right? So when you're breaking these levels on smaller time frames, these stronger time frames, or whenever you're breaking these stronger time frames with smaller time frames with the fair value gap, that's price telling you like, hey, we're no longer buying here. Because at one point these were previous buy levels, right? This low here, or these were previous sell levels, like people were selling off here, huge sellers. So when we no longer respect that sell off level and we break through those levels with fair value gap, that's price literally telling you where it wants to go. So if you're patient enough to wait for those levels to be broken, wait for the fair value gap to be formed, and wait for the retracement, you will never, ever, ever lose another trade unless the trend reverses on you and you just trade the other way. You take one small loss. You will never, ever, ever lose. The fair value gap is the single most important thing, in my opinion, the single most important indicator in all of trading.